Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And all I have to say is she's back. The one and only Anna Kelly. Hi, Anna.
Hi, I'm so glad to be back with you this week.
Yes. We missed 2 weeks. I really, it's funny. I missed our Wednesday conversations.
I did too. We both
Awesome.
had great vacations though, which we need, right? That's why we do
Absolutely.
this.
Exactly right. Exactly right. Well, the first thing I want to talk about is I want to talk about Jerome Powell's 8-minute speech on Friday. Eight
Yes.
minutes. 8 minutes.
Short, very
Short.
historically short.
Yes. Succinct, to the point. I'm not going to lead the witness, so I'll just step back and ask you, what'd you think? It's been 3 or 4 days. Have your opinions changed? What'd you think of the meeting on Friday?
Yeah, I thought it was very short and to the point. I mean, he didn't mince any words. He's essentially saying what they've been saying since, the end of last year, but nobody really believed. And that is they are serious about tackling inflation. It is their number one priority. They want to see inflation back down to 2%. They haven't hedged on that number or tried to make it any higher. And they're saying that they are fully committed. It is going to cause economic pain. So while he didn't say this will cause a recession and cause you to lose your jobs, he continues to say there will be pain and fallout from this, but we have to tackle it. And he specifically invoked Paul Volcker and said, before Volcker came in, it was almost 15 years of trying to fight inflation, backing off, and it coming back worse. And so he's basically said, we're committed not to make the same mistake of the 70s. We're going to continue to raise rates, get them basically neutral, and then probably even restrictive, AKA they're going higher. Mortgage rates are going higher as a result, and there's going to be fallout from that. And so it was very succinct, short and to the point, and it basically said, don't expect a Fed pivot yet. The markets have kind of been expecting that they're talking tough, they'll raise rates, and then they'll back off and do what they always do to save the markets. And essentially, he's saying, we're not going to save you. We're going to tackle this thing. You better be prepared. You should have been prepared, 9 months ago. But they're full on hawkish, no questions about it, in that quick 8 to 9 minute speech on Friday.
Yeah. So again, you're very right. He repeated things he said in the past. Yes. I do think he dropped, because I think in the past he said all these things, but he always had a comma.
Yes.
Right. And then he said other things like, data dependent or blah, blah,
Sure.
blah. Right. And then the market always looked at the comma, not the main sentence.
Right.
And today, or on Friday, there was no comma. It was an exclamation point where it's like, bang, bang, right. Bang. So that was good.
Point market drop.
Yeah, that'll get your attention.
Yeah.
The other thing I think he did is I think he purposely tried to tackle this idea of a rate cut in 2023. The market, Cathie Wood has been saying we're going to have a September pivot. That clearly never made sense, is clearly out the window. But there were a lot of people that were like Q1 pivot. Not only Q1 pause, Q1 cut. Like, we're going to go into recession. The Fed's weak. The Fed's going to back off. They're going to do what they always do. And I think Powell took it out. And then Loretta, God, I forgot her name. Loretta Mester, I think her name is, Fed president out of Cleveland. She came out yesterday. I read it this morning saying we're going above 4 and I see no cuts in 2023. So not only is Powell talking tough, more and more Fed presidents who used to be dovish are getting in line, if you will. I think Fed funds rate are going to 4%, probably over 4%. We do not get a cut in 2023. What do you think?
Yeah, I agree with you. I think they've made it clear. And in Powell's former speech this summer, he basically said, we need to get rates at least to neutral, which is 4%. And then in the same speech, he said 3.5 to 4. So I've been expecting that they go to 4 unless we hit deep recession, and then they'll, pivot, obviously. But the other thing that they continue to say is that even though they're watching numbers and they see that there's some slowing in growth and they see that we have some recessionary conditions, that because of wages and jobs, they don't think it's going to be a deep recession. So, I think until we hit a deep recession that's deeper and longer than what they want to say they caused, they're not going to pivot, in my opinion. So I think it's going to take, usually it's 6 months before you even see the impact of any of the rate increases. So
You're right.
if they raise another 75 points here coming up in September, you're looking at February, March before you even see the impact of that at all. So I think that they get us to neutral, which is, let's say, 4%, and maybe go restrictive if inflation doesn't come down enough. And, there's a lot of things happening geopolitically, which he really didn't talk about in the speech. But, I think it was today that Russia officially shut down the pipeline for gas.
Nord Stream 1 is shut down again for maintenance.
Right when, winter is coming. No pun intended, right?
Yeah.
Maybe a pun intended. So winter's coming in a lot of ways, but energy prices are going up. Food prices are going up. Housing prices are still going up as we experience tax increases, insurance increases, and everything else. So the core of what people spend money on, food, energy, and housing, I don't see that coming down anytime soon just because of rate increases. And so I think that we go into 2023, with both inflation and elevated rates, classic stagflation. And we're starting to see the job layoffs that come with that.
Yeah. Again, I think Powell's I think he's focused on two things. One is the job market. And I don't know if you saw the JOLT survey yesterday or ADP this morning. Both of them are pointing at wage inflation accelerating. ADP came out this morning. I think it was 7.6% collectively and 12.1 in leisure and hospitality.
Wow.
That's going to catch Powell's attention. It's because wage inflation is that nasty thing that feels good at the street level, but when you roll it up into economy, it just keeps pulling inflation higher and higher and higher.
Yeah, and it's really difficult to kind of say where are we, because at the same time that you see wage inflation in certain sectors, you see big pay cuts, hiring freezes, and job layoffs in many other sectors. And we're seeing, I think it was today that Bed Bath & Beyond is cutting 20% of their management. Several other major companies are cutting 10, 15, 20% of their employees or shutting jobs. So, it's very industry specific, and it hasn't gotten extremely diffuse yet, right? So when we talk about recession, we talk about how diffuse is it, how broad is it across all of the sectors of the economy. And we're starting, it's interesting, some sectors are doing really well and others are starting to really show signs. So I expect more pain ahead. I think we do go into a deeper recession, or at least a long recession, who knows how deep. And I don't think the Fed pivots on rates until they say, okay, we've caused enough pain and inflation is down to 2% or very, very close before they even think about pivoting, which I guess would be 2024 if I had to guess.
That's exactly where I'm at. We're going to do this a little bit more in video number 3 today, but I'm sitting here right now, call it September 1st, right? Or it's August 31st, excuse me. And I don't feel good about 2023 at all. The stock market, real estate. I think the housing market's in a depression. Again, we'll do a lot more of that in video number 3. Rates are going up. Jerome Powell wants to spank the market. He wants to get demand down. He wants to beat inflation. He would much rather be the guy that's remembered as Paul Volcker 2.0 than Arthur Burns 2.0. And right now he's Arthur Burns. And he's like, I don't want that. I want to be Paul Volcker.
I agree. Yeah, I don't feel good about where the economy is going, but I do feel good about maximizing the opportunity, which might be one of the best periods of opportunity that we've seen, since 2008, 2009.
Let's be very clear as we wrap up video number 1. My housing depression call, which again we'll hit in video number 3, is for the masses. It's going to suck. Like if you're a real estate agent, get ready, Buttercup. You're going to do half the transactions or worse. But if you're an investor like you or I, who've been doing the work, you have a network, you have creative opportunities, you have access to capital, 2023 is probably going to be an amazing year. I have a hard time believing it will be my best year, but I bet you it'll be in the top 2 or 3.
Yeah, I agree. I think it will be. We just have to be prepared. And like you say all the time, do the work, know your market, know a great deal, and be ready to pounce when they're really great deals.
There you go, Anna. Well, do me a favor. Where can people find you?
Great. You can find me on my website, reimom.com. If you're interested in masterminding, coaching, and greater purpose capital, if you're interested in passive investing in apartment complexes where we make a difference and we help accredited investors do well in these markets.
Awesome. Thank you so much, Anna.
Thank you.